Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines that we are tracking this morning. A lot of cues to watch out for. But first up, as always, let's take a look at what the Asian markets are doing. It was a weak handover from Wall Street, especially because of weak outlook in the fourth quarter by Target. And that is something which is putting pressure in Asian markets as well. It is in addition to a lot of economic data that is coming through in this region. So Hang Seng sitting with cuts of 1.5%. We have Taiwanese index, which is down 0.6%. Nikkei too is under some pressure, and that is on the back of a weak data coming in Japan. Apart from that, if we look at the other indices, something like a Kospi, that too is lower by 0.9%, and SGX Nifty is indicating that the start for our own markets could be in the red. A 60-point downtick is what the SGX is indicating as we speak. Let's talk about the US markets now. Wall Street ended yesterday's session lower, with the Dow Jones ending over 39 points lower, the S&P 500 finishing 0.8% lower. Nasdaq was the day's biggest underperformer, closing 1.5% lower. CNBC's Seema Modi gets us a wrap of all the action on Wall Street.
A mostly down day for stocks after Target warned that its holiday sales will be disappointing. But we're getting a different picture from overall retail sales. They increased more than expected last month, with strength in big-ticket items like cars and furniture. The Dow alternating between small gains and small losses before ending down 0.1%. The S&P 500 stayed in the red all day, closing with a loss of 0.8%, and the Nasdaq finishing down as well. Target shares closing down about 13% on that pessimistic outlook that depressed the market. A company executive says sales started falling sharply late last month and stayed weak this month, with inflation forcing many shoppers to make trade-offs between what they need and what they want. That's the action from the U.S. market. Back to you, Mumbai.
All right, that is the update coming in from the U.S. market. Speaking to CNBC about the Fed's rate hike trajectory, San Francisco Fed President Mary Daly said that a pause in rate hikes was off the table. Let's listen into her comments.
Pausing is off the table right now. It's not even part of the discussion. I'd say right now the discussion is rightly in slowing the pace and putting the pace discussion in the background, focusing our attention really on what is the level of interest rates that will end up being sufficiently restrictive. So I really want to turn people back to the statement we released, to Chair Powell's press conference, which I think just reiterated some of the aspects of the statement that really focused on pace was the conversation of the first phase of tightening, and that has been completed. We're in a slightly restrictive space by most people's calculation. Now we're really talking about the level that is sufficiently restrictive. That means data dependence, extreme data dependence, thinking about the cumulative tightening we've already put into the system, and of course those lags in monetary policy that become really important if you're trying to gauge exactly how you get somewhere without over or underdoing it.
Separately, a whole host of Fed officials, including the Fed Chair Jerome Powell, will be speaking at various events later today. The list includes St. Louis Fed President James Bullard, Cleveland Fed President Loretta Mester, Minneapolis Fed President Neil Kashkari, Chicago Fed President Charles Evans, San Francisco Fed President Mary Daly, among others. Meanwhile, Federal Reserve Governor Christopher Waller said he's open to reducing the level of interest rate increases soon, so long as the economic data cooperates. He also added that he won't be making a judgment about that until there is more data. This comes ahead of the December 13 to 14 Fed meeting. Market expectations are running high that policymakers will approve another rate hike, but this time it will be 50 basis points. Do remember, a 50 basis points hike would come after 4 consecutive 75 basis point increases. On that note, let's also listen to some important opinion from PIMCO's Erin Brown on the U.S. bond market and her outlook on a possible recession.
It is a recession call. We do think recession is more likely than not into 2023, likely hitting early 2023. And we see that as, pretty high probability in the U.S. and very high probability across Europe and the UK. And we think as a result of that, you're going to have duration start to perform better as you move deeper into a recession. And that certainly is underpinning a lot of our call for next year. But as you start to move into a recessionary environment, that's where the scales really tip in favor of fixed income and owning fixed income in portfolios relative to equities. And we think we're at that tipping point right now as we turn the page into early next year. Throughout most of this year, we have been underweight bonds, and we are now starting to shift to see value within certain segments of the fixed income market, particularly those that are higher quality, that offer good return with very low default risk probability. And we think that those bonds will start to outperform in the year ahead, particularly given the starting levels for fixed income yields, which for a cash rate is about 4%. And you take a little bit more risk for high quality corporate, and it's about 5.5% to 6%. That's a really good return relative to what you can expect to earn across riskier asset classes next year.
Okay, that is all the opinion coming in on the bond market. But let's talk about European markets because it was a weak day of trade on fears of political instability after Russian-made missiles landed in Polish territory, raising tensions between Russia and NATO countries. The French CAC closed 0.5% lower. The German DAX saw cuts of 1%, while the FTSE was lower by 0.7%. And that's all the global market action. A lot that has happened overnight, but how will these overnight cues impact our own markets? We have our research team joining in to tell you just that, the trade setup, the stocks and news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. Vivek, let me come across to you first up. What is the market setup looking like today?
Well, good morning. It just appears as though the wait for the fresh highs as far as the Nifty are concerned may just get delayed that little bit longer. So, overnight cues are not very encouraging in terms of the fact that most of the US markets are ended in the red. Important to watch the fact that, as we mentioned, the retailer targets guidance was quite soft, and this is something that has led to renewed worries as far as consumer spending confidence is concerned. European markets, like you just mentioned, too, ended in the red. And when you're talking about gold prices were largely flat, and when you're talking about the crude prices actually fell quite significantly. In the last couple of trading sessions, we've seen quite a bit of a sell-off. WTI futures were down over 1.5%, and Brent futures fell over 1% in yesterday's trading session. One important event to watch out for would be the weekly jobless claims as far as the US markets are concerned, and markets will continue to take cues as far as economic data is concerned. Asian markets are indicating quite a bit of a soft start as far as Indian markets are concerned. SGX Nifty 2 is indicating muted open. It'll be interesting to see the strength that Indian markets are seeing, the relative strength, of course, something that continues in today's trading session.
Okay, all right. That is the market expectation today, 70-point downtick on the SGX Nifty. Now let's go across to Surbhi. She'll be listing out all the stocks that will be in focus today. Surbhi?
Few stocks that will be on my radar today. The first one is Aurobindo Pharma, where the US FDA concluded the inspection in their Andhra Pradesh unit. The company received an establishment inspection report classifying the inspection as voluntary action indicated. Next is Sven Life Sciences, where the company announced randomization of the first patient in the phase 3 global clinical trial for the treatment of Alzheimer patients. Next is Hindustan Zinc and Vedanta, where Hindustan Zinc approved the second interim dividend of 15.5 rupees per share, which comes to a total of approximately 6,550 crores. Next is Balrampur Chini, where the company commences production in its new distillery unit with a capacity of 320 kiloliters per day. With this, the total distillery capacity is now at 880 kiloliters per day. Next is Timken, where the existing manufacturing facilities in Gujarat will be expanded to manufacture SRB and CRB. The expected start of this expansion is Jan 2025, and the capex for this project is 600 crores. And lastly, Ircon, where the company emerges as the lowest bidder for the project floated by the Madhya Pradesh government. The value of this project is approximately 393 crores.
Surbhi, thank you so much for all those stocks. And finally, let me go across to Mangalam, who's joining in with all the cues from the F&O space. Hey, Mangalam.
Good morning. So the Nifty yesterday consolidated in a 100-point band, just below record highs, closed a little above that 18,400 mark after meandering between 18,440 and 18,350 at the lower end as well. The domestic institutional investors were buyers in the cash market to the tune of 1,400 crores. The FIs were selling, and this is something I'll be watching out for primarily because a lot of the FI supply may also be on account of a lot of these pre-IPO lock-ins opening, and today there is that deal with Paytm too, so that is something we'll be watching out for. But in index futures, the FIs have gone all in. In index futures, they've bought almost 1,845 odd crores, added 12,700 longs, covered 6,000 shorts, and as a result of which the FII longs in index futures are at 65%. That's among the highest that we've seen in this series. And on a net basis, the net long positions of the FIIs are 55,000 contracts, and that's the highest that we've seen in the last many days as well. Ahead of weekly options expiry, The cues coming in from the option space also rather positive. They sold 34,000 puts and covered 4,350 calls, short calls that is. And in just the last 2 trading sessions, the FIs have written 1 lakh puts. So that's telling you that the street is bracing for a strong support at the lower end. The SGX Nifty is indicating a dip. Let's see whether that dip gets bought into or not, because if these short puts have to unwind, then the pain could have been just a little more. The 18,400 call is where we're seeing most of the action. That's the 16,400 call. Just take a look at the 18,400 call and put. Put together, they have a premium of almost 100 odd points. It is weekly options expiry today, so maybe the option writers are eyeing that 18,300 to 18,500 range for the Nifty. The only thing we'll be watching out for is the number of stocks which are entering F&O ban. Notwithstanding PNB getting out of F&O ban yesterday, we still had Balrampur Chini and Indiabulls Housing Finance enter the ban alongside the stocks which are already in ban, the kinds of BHEL, Sun TV, GNFC, Delta Corp. So 7 stocks in F&O ban, makes the mid-cap investors a little iffy.
It does. All right. Mangalam, Surbi and Vivek, thank you so much for joining us and taking us through what to expect from the trading day today. With that, we'll slip into a short break now. Up next, we'll get you all the updates from the second day of the G20 summit in Indonesia. Stay tuned. Welcome back. You're still tuned into Power Breakfast on CNBC-TV18. The government, in its latest fortnightly review of the windfall gains tax, has increased tax on crude by 700 rupees a ton to 10,200 rupees from 9,500 rupees a ton. Export duties on diesel have been reduced to 10.5 rupees from 13.5 rupees a litre, and export duty on aviation turbine fuel remains unchanged at 5 rupees a litre, while no duty has been added on petrol exports. Well, this data was expected for a long time and it has finally come through. Moving on, after the lock-in period for pre-IPO investors expired, sources are telling CNBC-TV18 that SoftBank has decided to sell more stake in Paytm. Vivek is here to tell us more. Vivek, what are you picking up?
Well, good morning. So what sources indicate to us, and we've had a look at the term sheet as far as Paytm likely block deal is concerned. So SoftBank, that holds almost 17.45% stake in Paytm, and this holding is through SVF India Holdings, Cayman Limited. This is the name of the entity that holds the stake in Paytm on behalf of SoftBank. We understand that they're looking to offload almost 4.5% out of this total stake, and with this they're looking to mop up close to $215 million worth of funds via this particular block deal. What is interesting is the price band set for the deal. The price band is between 555 rupees to 601.5 rupees. Now the lower end of the price band indicates a 7.7% discount to yesterday's closing price. And interestingly, if you look at Paytm post the IPO pricing, the stock is down almost 70%. So it seems like quite a bit of a forced exit from SoftBank, but definitely Paytm will remain in focus on the back of this block deal that is expected in today's trading session.
Oh yes, it will. Thank you, Vivek, for joining us. So Paytm will be the stock on our radar today. Let's move on. Leaders of G20 nations wrapped up their summit in Bali yesterday with a joint declaration condemning the war in Ukraine. In a strong statement, the joint communique said the G20 deplores Russia's aggression in Ukraine. Vladimir Putin did not attend the summit, and Russia's foreign minister, who attended the event, was not present on the last day. Meanwhile, India has taken over the G20 presidency from Indonesia. Kiran Khatri wraps up what was an eventful summit and previews the high-profile gathering that will take place in India next year.
G20 leaders in Bali woke up to news of an explosion in Poland which killed at least 2 people near the Ukraine border. US President Joe Biden called for an emergency meeting of G7 and NATO leaders on the sidelines of the summit. After the meeting, Biden said it was unlikely that the missile was fired by Russia.
Contest that. I don't want to say that till we completely investigate, but it is. It's unlikely in the minds of the trajectory that it was fired from Russia, but we'll see.
The G20 joint declaration condemned the war in Ukraine in strong terms. The statement said it deplores in the strongest terms the aggression by the Russian Federation against Ukraine and demands its complete and unconditional withdrawal. The statement went on to say the use or threat of use of nuclear weapons is inadmissible. The peaceful resolution of conflicts, efforts to address crisis, as well as diplomacy and dialogue are vital. Today's era must not be of war. These words echoed what Prime Minister Modi said at the Shanghai Cooperation Summit in September.
Prime Minister's message that this is not the era of war, and that the best way is to return to the path of dialogue and diplomacy to resolve the conflict, resonated very deeply across all the delegations.
Post the final declaration, it was time for Indonesia to hand over the G20 presidency to India by passing the honorary gavel. India will hold a high-profile gathering next year. In the build-up, there will be 200 meetings across 32 different sectors, culminating in the summit on September 9th and 10th of 2023.
आज मैं ये आश्वासन देना चाहता हूं कि भारत की G20 अध्यक्षता इंक्लूसिव, एम्बिशियस, डिसिसिव और एक्शन ओरिएंटेड होगी.
From sessions on health and digital transformation to bilateral meetings with world leaders, PM Modi had a packed schedule in Bali. He held bilateral talks with leaders of Germany, Italy, France, and the UK. The new British Prime Minister Rishi Sunak approved 3,000 work visas for Indian professionals after meeting Prime Minister Modi. However, there was no bilateral between Prime Minister Modi and China's President Xi Jinping. Both leaders came face-to-face at a dinner and exchanged pleasantries, but they have not held any bilateral talks since the clash between Indian and Chinese soldiers in Galwan Valley in May 2020. One of the highlights of the summit was the meeting between President Xi and President Biden, where they reached common ground in warning Russia over the use of nuclear weapons and agreeing to restart climate talks to cut emissions. President Biden also said he does not believe there's any imminent attempt by China to invade Taiwan. One leader who skipped the G20 summit was Russia's President Vladimir Putin. Foreign Minister Sergei Lavrov did represent Russia in his place. However, he left the summit before the joint declaration condemning the Ukraine war was released. In Mumbai with Kiran Khatri, Arundhati Ramanan.
All right, that's an interesting take on what happened in the G20 summit this time around and what we can look forward to now India takes over the presidency as well. With that, let's slip into a break now. Up next, we'll get you all the cues from the commodities market. Stay tuned. Welcome back. Still tuned into Power Breakfast. Let's talk commodities now as promised. Manisha Gupta is joining us with all that update. Hey Manisha, good morning.
Morning, Sanal. Thank you for that. Starting with the crude oil prices, where we have seen a decline yet again. I mean, this really seems to be becoming a norm now. Again, one day and a decline the other day. So what we are dealing with right now is a decline, 1.5% down overnight, and Asia is following that with another percentage point of a decline. This is as the market gives away the premium of the Druzhba pipeline carrying Russian oil to Hungary, which was shut yesterday but has resumed yet again, and that premium seems to be getting out of the market. What the street will watch out for now is the December 5th, when the European Union ban on Russian crude comes in place. That is the next big one to watch out for. So meanwhile, within metals as well, we have seen some declines coming in. Copper prices, which were trading at a 5-month high, have seen the prices come off. Same is the case with steel as well, which was trading at a 5-month high yesterday, seems to be getting into some kind of a profit taking because of the strength in US dollar index in Asian markets right now.
All right, that is all about the commodities market. Manisha, thank you so much for making sense of those moves. A quick look at the Asian markets. Hang Seng has dropped 2% as Tencent has slashed some stake in another company. So they have actually seen extension of the losses that we've been talking about since the start of the show. We have Japan, which has posted a $15 billion trade deficit. So that is not going very well with the Nikkei. So that particular index is down 1%. We have Taiwanese index, which is also sitting with cuts of 0.7%. So across the Asian markets, we are seeing largely red on the screen, and SGX Nifty, which is coming up for you on the screen right now, is down 70 points at the same levels when we started the show. But yes, it is indicating that the start for our own markets will be in the red today. With that, we'll do one thing. We'll take your leave on this edition of Power Breakfast. Do stay tuned. Bazaar Morning Call comes up next.